Hi, my name is Swapnil Karkare, a chartered accountant and an economist, and here is your economic and finance wrap for the month of April 2025. Here's what happened in the global markets in the month of April. Stock markets were a bit down this month. The tariff effect, you would already know that. India's Nifty 50 and Mexican broader markets, however, have managed to grow by 5%. Indonesia, Brazil, Russia, and Australian markets also gained this month. Rest all were in red. In India, except for metals and tech stocks, all other stocks have gained this month. If you remember, tech was the loser even in the last month. Consumer durables, telecom, oil and gas, and banks led this month's rally. Crude oil fell sharply, around 18% just in 1 month, posting the steepest monthly decline since 2021. It brought all petroderivative prices down this month. Reason? Well, Saudi Arabia is willing to produce more, so more supply and less demand means drop in prices. Within metals, gold continued its rally while copper fell sharply by around 10% this month after rising 12% last month. In agri-commodities, prices of tea, cocoa, barley and coffee rose this month while potatoes, rubber, palm oil prices fell sharply, all thanks to trade war. 10-year bond yields continued to go up in Turkey. Russian bonds also saw some jump, but rest others were in negative zone. Especially, even the US yields were down. There's more story about US yields in this episode. That was your quick monthly wrap of markets in April 2025, and now to main stories. Is India running out of gas? Yes, that's the question because India is dreaming of using more natural gas from 6% of today's energy mix to 15% by 2030. But these dreams might shatter. At least that's what we can read from all these news. In FY25, crude oil production dropped by 2.5% and natural gas production down by 1%. Reason? Decades old and aging oil fields and no big discoveries have led to lower production. Reliance's KG-D6 block, once a rising star, is now showing signs of aging. ONGC and Oil India are still pumping from fields discovered ages ago. Without major discoveries, India might go empty. As a result, India imported a record 88% of its crude oil and 51% of its natural gas in financial year 2025, marginally up from FY24. And that's not just quantity. Price volatility is also back. Due to major global shortages, spot prices of LNG have shot up. Meanwhile, alternative fuels like naphtha and propane are becoming cheaper and thus more attractive for Indian refiners and industries. And over and above that, the government has increased domestic gas prices, the first since 2023, and it is a natural progression towards full deregulation of prices by 2027. This means increased gas prices for everyone. But India is building pipelines, negotiating trade deals with a lot of countries, but that's a slow process. With the demand rising 60% by 2030, we have got a tough road ahead. Now, the next news. Something amazing happened in March 2025, whose data came in April, so this news. India registered over 21,000 companies and 8,000 LLPs, the highest ever in a single month. That's a 27% jump for companies and 62% jump for LLPs. Backward states like Rajasthan, Bihar, and Madhya Pradesh, once called as Bimaru, are now leading in these registrations. For example, Rajasthan saw from 1700 new companies in FY15 alone to 7,600 plus in FY25. That is almost 6 to 7 times growth. Now consider the example of Jammu Kashmir. From 200 companies registered in FY15 to 1400 in FY25. That's again a 7x jump. But recent tragic events in Kashmir might slow this down. What an unfortunate and horrifying thing, right? But now coming back to data, not all states are progressing. Two states stand out. Delhi, largely because of its geographical limitations, and West Bengal. We all know it's a classic case of deindustrialization in India. Finally, a reality check. By March 2025, India had 28.5 lakh companies registered, but of them only 65% were active. So that means registrations alone don't matter. What matters is jobs, value addition, and growth. Registrations are just a number. Now, the next news is from smaller cities. India's small towns are booming once again. We have discussed it in one of the previous monthly wraps, but now, once again, we are discussing the same story with new data points. Nearly 30% of new clients for portfolio management schemes and alternate investment funds are now coming from beyond 18 state capitals, which is basically tier 2 and tier 3 cities. Those investors have graduated from investing in mutual funds, then to direct equity markets, and now wealth advisory services. Even IKEA wants to tap this opportunity. IKEA is now shifting its strategy for India. It will now create smaller format stores designed specifically for India in specific localities in small towns. Real estate partners, they are looking for you. Now, meanwhile, pet parenting is also booming, not just in metro cities but also in tier 2 and tier 3 cities. Online pet spending has doubled from $1.6 billion in 2019 to $3.6 billion in 2024. Tier 2 cities are growing by 75% and tier 3 cities by 60%. Now there's a news from UP startup culture. It is said that 35% of startups in UP are registered in small towns of UP. So that's something interesting happening in India. From small towns, we now go directly to United States of America. Who can bring Trump to his knees? Probably we don't know, but bond markets can certainly make him blink, pause, and think. On April 2nd, Trump announced reciprocal tariffs on all products imported in US by all countries. Minimum will be 10% and India was charged with 26%. They were supposed to begin from April 9th onwards, but they didn't. Investors were uneasy, they panicked, they started selling US government bonds. And what happened? Prices fell, yields went up from 4% on 4th April to 4.5% on 11th April. Are for 10-year government bond yields. That was a big red flag for the government. Rising yields means higher borrowing costs to the government. Remember, bond is just a loan taken by government. So, market decides how much government pays interest on those bonds. So, any mess up in fiscal policy means that bond market is not going to be subservient. It is going to act like a watchdog. And it did. On April 9th, instead of signing the reciprocal order, he paused it for 90 days. The message was clear: mess with fiscal stability and bond markets will push back. But for how long will they push back? What will happen after 90 days? Nobody knows. Probably not even Trump knows what will happen tomorrow. We are in a big uncertain world. But one thing is certain, this monthly wrap. So that's it for today. If you like it, please do hit the like button, subscribe to the channel, and also follow me on social media handles. Thank you. See you again.